All right, everybody. So today we are going to be going over demand and supply in the Forex market. This is going to be a video for our new beginner traders out there, and even for some intermediate traders who are actively trading the Forex market. We're going to go over some characteristics of demand and supply and how I use it as a profitable Forex trader in the active markets to turn a profit in using these zones. And so let's go ahead and hop into this video, and we really hope you guys enjoy.
Stars, I'm a fool for your love.
All right, everybody. So we're going to go ahead and start our just two-slide presentation here over supply and demand for beginning traders. So supply is simply an area in the market where selling exceeds buying, right? In economics, this means that the value of surplus exceeds the value of demand. And so in the Forex market, supply is a marked area that has been basically been check marked by the banks and institutions so that they can later revisit, so that the market can later revisit that specific area to garner more sellers. And obviously, on our last checkpoint, not all supply zones should be selected, but you should have multiple confluences before entering a trade if you're going to be using supply and demand zones in your trading strategy. So demand is almost the exact way that we have previously marked on supply. However, demand in economics is when the demand for a product or an object exceeds the supply, meaning that people want it, but there is not enough supplies in the market to be able to fill the needs of the demand. But however, in demand in forex is almost the same, right? It's just an area where buyers are residing where they may be able to get in cheaper rather than at a more expensive price. And so in forex market, we call this a discount price, where uh, buyers are able to come in and buy up contracts at a cheaper price rather than buying them at a more expensive price. So let's go ahead and look at the Nasdaq 100 charts and go ahead and show you some examples that we took this past week and how we were able to bank on some trades using supply and demand zones. All right, folks. So we are looking at this example here on the Nasdaq 100 that we took last week. We were only able to close half of our. All right, folks. So we are looking at the 5-minute chart on the Nasdaq 100. Throughout the week last week, we were very bullish. We were breaking new highs, and we were mainly looking for buying opportunities. As you can see here, we were able to close half of our position on a 1 to 11, and the other half, unfortunately, got stopped at a break even because we were unable to break out these highs right here, which was our main target. But our first target was these highs, and we were able to take out half a position, and we were very happy with the results there. However, we're going to go ahead and look at this demand zone that we had made up here inside this blue line, which represented a very strong 1 hour support and resistance level. And why did I choose this level? Well, there's a couple of examples why I chose this level. One reason is it marked up a discount price in the market, especially on this very lengthy bull run. As you can see, the price from here all the way to here represents a Fibonacci level between 0.5 and 0.3. So that means that we are getting a discount price on a bullish sentiment trying to reach out these new highs. But not only that, we also have a very, very, very obvious checkpoint that the banks have recognized by utilizing the banker candle method, which the banker candle method is basically the last candle before the impulsive movement of that break structure. We have also highlighted the low of this candle right here and the high of the previous impulsive candle, which marks the total demand zone for this impulsive movement right here. We had obviously broken a couple of highs here that really gave us the confidence that the market was going to return to those highs. However, when we entered to the zone at first, we were really looking for just a tap and then a double bottom. So we actually did reach this double bottom here on the 5-minute chart when price had broken down, it impulsively moved up, impulsively moved down, one more punch up, and then we double bottomed on this last wick right here. And when we broke structure, this is kind of the area that we were looking to get in. And we did actually able to get in earlier in this session. However, we did have some limits down here, so we kind of just averaged out the price of our total position right here at a 1 to 11. All right, folks, so we're going to go ahead and look at the second example, but this one's going to be a little bit more different. This one was more of an intraday trade than anything. We have identified the same exact concept on the last trade where we were trading around this major resistance support level that was a very reactive area. And we have also marked up an area in the market where we had a banker's candle right here, and we also covered the wick of the last green candle before the impulsive movement up. And so this marked a very, very strong demand zone as we had continued to break high and higher. We were able to get into an area in the market where we had a discounted price, where price was cheap, and for contracts going long, this was the area that you wanted to get in. Instead of going here and buying it at a more premium price or a more expensive price, there are more buyers residing at a discount price waiting to get in for cheaper. And as you can see, we waited for we didn't immediately enter this trade because we wanted to see a more reactive movement. And as you can see, once the price started moving away from our zone, we had hopped in, put our stops at the last swing low, and targeted the last liquidity pool, which were these highs. As you can see, we profited a nice 1 to 6 trade right here, and then a 1 to 11 here, basically doing the same thing, identifying a 1 hour area of supply and resistance, or support and resistance, identifying an area of demand in the market, but making sure that we also identified the discount price rather than the premium price. So we were able to get in cheap, and we were able to bank on a lot bigger of a move, if that makes sense. Let's go ahead and look at our last example without using these support and resistance levels. All right, folks, so we are looking at the 5-minute chart here of the NASDAQ where we took a supply trade here. So we're going to go ahead and look at the confluence as to why we traded this supply zone and how we were able to bank on a nice 1 to 9. So the reason I took this trade was because the price of the NASDAQ has been consolidating in an area where we have really seen a lot of bearish pressure. Overall, the market sentiment was very sell side, and we were looking to bank on a very nice trade on a reversal. In this case, we have traded away from these highs where we have broken not one, not two, but we have broken, well, we did break twice, right? We broke these lows and we also broke these lows. So this indicates that we are looking for a reversal to the sell side, in which we identified an area of supply by analyzing the last green candle plus the wick of it, and as well we looked for the last red candle before the big push down that broke structure. And as you can see, we didn't get in right away putting our limit orders. We waited for a reaction in which we broke a low, which right here. These are called shooting stars, where they have a very long tail and they have a very small bottom body, which represents lots of sell pressure. We had a break of structure somewhere in this area where we had pulled the trigger to enter into our sell side short, in which we targeted the last liquidity pool, which was marked by this very strong, impulsive, bullish, impulsive movement here. And as you can see, we were targeting these lows right here because we knew that there'd be a lot of liquidity sitting in this area, and we knew that the market movers were going to be targeting this area of liquidity in order to make their next move. And as you can see, we set our take profit right at the same zone. We more than exceeded it before we started to trade back up into another supply zone and then a continuation sell-off. All right, folks, so that's going to be it for this video. This was just going to be a very beginner type video where we kind of explained the economic concepts to supply and demand and how we can apply these to the Forex market, and especially in a form of a very profitable trading concept. But we hope this was very informational for you guys. We're going to be working on some more advanced concepts later in our development of Forex Unlimited, but we just want to shoot out some videos that are going to be more helpful to the general public, especially those new traders who are just now trying to trade the Forex market. But we really do hope this was informational. But until next time, have a good one. We really hope this helped.